and welcome to Home Matters with Kimberly DeVries. Today we are joined by Scott Breen. Scott Breen is with us from Fairway, and we're so happy to have you here today, Scott, and excited to talk about repairing credit.
Thank you, Kim. A pleasure to be here and happy to answer your questions.
We do have some questions because just this week, I was asked by two individual people who both have bad credit, one who filed bankruptcy and one who has a credit score of in the 500s. And they know they can't qualify, both situations. So can we take and talk about each situation separately, starting with the one with a 500 score credit?
Okay, well, let's take a couple of different scenarios in a credit score that's in the 500s. If they're simply not making their payments on time, they need to correct that right away. Now, that's the first thing that you need to do, is make sure that when you agree to have somebody extend you credit, that you actually pay within the terms of the credit. That reports negatively if you miss those payment deadlines on your credit report. So number one, make your payments on time. Number two, if they have several of them that they're paying late, you need to make sure that you make all your payments in a timely manner. It's probably going to take 6 months, almost a full year, to rehab their credit and get to the point they're in the mid 600s by making timely payments. There are other extenuating situations that somebody can come in with a 500 credit score. Okay. If they're brand new to the market and they just open up credit, oftentimes they'll start in the mid 500s. They just simply need to make their payments on time, and that credit score will take maybe 30, 60, 90 days to jump up to 600, 650, where they can purchase their home.
That quickly?
Yes, if it's new credit. Okay. If they've been making tardy payments for several years, it may take a full year to rehab their credit.
Okay, so you guys listening, it really does depend on your unique situation. And that's why we've got Scott here today. If you have questions about that, you can always contact Scott. Contact me. I'll put you in contact with Scott. And he is an expert in this field, been doing this for many years. How many years have you been doing this, Scott?
I don't want to admit that, but it's more than 20 years.
He's got the experience.
I've got the gray hair to prove that.
He's got the gray hairs. That stands for something, Scott. So tell us about the other one.
Well, let's drill down on the low FICO score, simply because there's a couple of ways to repair that. Number one, if they're just establishing credit, they probably ought to have at least 2 or 3 trade lines. What that means is maybe a bank credit card, maybe a card at RC Willey's, and maybe a gas card. So they're a little different. And if they just make small charges each month on all 3 of those cards and then make payments in a timely manner, that's going to establish their credit and quickly get them to a point where they can purchase a home. Now, credit needs to be established for approximately 2 years before FHA will allow them to purchase a home, because they want to see them demonstrate the fact that they can make timely payments. And when they've agreed to make timely payments over a period of 2 years, then your credit's going to be great and you'll be able to buy a home. So that's number one. If they're trying to rehab their credit, maybe they went through a terrible situation, a divorce, a death, loss of a job. Gosh darn it, that's just time where you got to kind of suck it up, look at where your debt is at. Honestly, that's one of the reasons why we have bankruptcy. If you've had a life event where you really can't get out from underneath just that avalanche of debt, then you may want to consider filing bankruptcy, getting a new start, and moving forward. Bankruptcy, typically, in the second case that we talked about with the bankruptcy, they may have to wait 2 years to 5 years to have seasoned credit in order to reestablish their credit to purchase a house. But realistically, each credit situation is an individual circumstance, and it's a good idea just to look at it and make sure we're getting best advice.
Thank you so much. These are the questions they've been asking. How long is it going to take for me to rebuild my credit? And it's really refreshing to hear you explain the difference between having new credit, having bad credit because of delinquencies, and then also filing bankruptcy. Totally different situations, takes different amount of time to be able to rebuild that. So we appreciate that. So Scott also was part of what he does. If you come to me and are looking to buy a house, because as you know, I'm a realtor with Berkshire Hathaway Home Services Utah Properties, and I work with Scott as one of our preferred lenders over there at Fairway, and he does free credit repair. If you even contact me, I'll refer you to Scott. He'll be able to help start you on the road to repair. Isn't that right, Scott?
Yes, absolutely. And there's no cost for that either. Oftentimes you'll pay a credit repair company You can pay them $50 to $75, even $100 a month to have them repair your credit. Honestly, we'll do it for free. We have a group right at Fairway called Credit Tool, and they'll go in and help you to manage those debts, see if they can't get any erroneous information removed from your credit and improve your credit along the way. So it's a great service, and it's free to our clients.
Fantastic. Love hearing from you, Scott. Thank you so much for those tips. Scott, do you have anything else you want to add that may help people who are struggling with credit during these times of really having, homes are selling so fast. We're seeing so many homes move so quickly. We're seeing a lack of inventory, as you know, about 50% lack here in Utah. Any tips that you'd have for people maybe preparing to buy in the future who just can't get something right now?
You bet. I think it's important to manage your debt. It really is. If you have one credit card and it has a max $5,000 limit on it, and you max it out every month, your credit score is going to be in the mid 600s. Honestly, it doesn't make any sense to do that. What you really need to do, even if you have one credit card and you pay it off every single month, but you max it out every single month, that's going to hurt your credit. Credit utilization is something that most people don't understand. The face value on your card, you should keep it about 50%. So if it's a $5,000 card, you really shouldn't go much over $2,500. If you really need to have more credit for your business or for the things in your life, get a couple of different cards. Keep them at about 30 to 40% usage. And to be honest with you, in 60 to 90 days, you'll watch your credit go from 660 up to about 750. It's managing that debt that's so vitally important to purchase a house. And that credit score impacts the amount of interest that you're going to pay over a 30-year period of time based on your credit score, what you're going to pay. Honestly, if you're 660, you're going to be paying in the 4s. If you're in the 780s, you're going to be paying low 3s or even high 2s. It's just amazing.
Huge difference. Huge difference. And
really
I think there's a lot of people that just don't understand that if you've got credit doesn't mean you should go using it all. So that's a great tip, and we really, really appreciate that, guys. Remember, just like Scott says, don't use all your credit. Make sure you're being wise with what you're doing, and also get ready to save up your down payment so that you're ready when the time comes to buy a house, you're ready to go.
Well, and do me one more favor. Don't go car shopping before you go house shopping. Honestly, you walk into a dealership and they take an application, they may run your credit up to 12 times for you to get purchased for buying a car. It's just amazing. They never tell you that, but they're looking for the best option for the finance of your car. So if your credit is marginal at best, they may pull that sucker up
right
to
now.
6 to 12 times right now to see if they can get you in the car in the best terms, that they can get you into an expensive car. That's good. That may kill your opportunities to buy a house.
Yes,
so
and don't forget remember, guys, the house is an appreciating asset, 3 to 5% year over year on average. The car is a depreciating asset. Let's be smart about how we spend, right?
Well, Kim, why don't you help us with what depreciation and appreciation means? Help us out
very,
with that,
very
'cause
good.
that's a really good topic.
So yeah, it really is. And maybe that's a topic for another show, but really quickly on that appreciation, you're gaining value every year. Depreciation is something that the moment you drive that car off the lot, just like Scott, that sports car's just lost, thousands of dollars in value just by driving it off the lot, So.
Well, let me give you appreciation in a nutshell. Let's say you buy a $300,000 property and you put just 5% down, or $15,000. Let's say that house appreciates in 1 year 5%. Guess what? You just doubled your $15,000 to $30,000. That's how appreciative value works. And the car, well, that depreciation is right in the gutter when you pull out of the dealership.
Thank you so much for that quick excerpt on
welcome.
appreciation and depreciation. Guys, it's so important you understand these things. That's all we have time for today, Scott. Thank you so much for joining us for Home Matters with Kimberly DeVries, and we will see you guys next time.